Good morning. It's Jeffrey Christian of CPM Group. It's about 10 minutes after 11 a.m., the morning of Tuesday, the 4th of July, here in New York. Gold prices, precious metals and copper prices dropped sharply this morning. Gold prices presently are trading around $2,355. They fell maybe $10, more than that earlier in the morning. Silver is around $30.13. It fell below $30 this morning, got down to about $29.72. Platinum's $1,015, palladium's $928, and copper, for what it's worth, is trading around $456. Prices have fallen. I'm not supposed to point out that there were any number of promoters and others who don't know what they're talking about on the internet who said, once silver broke 30, the next stop is 50 or 75, or one guy this morning was talking about $10,000 silver. I'm not supposed to talk about those guys. I do want to talk about where prices are going to go over the next few months. There is a seasonality in gold and silver prices, which suggests that the prices, everything else being equal, seasonal weakness in fabrication demand and a reduction in investment demand often leads to lower prices in June, July, and August, picking up in the final 4 months of the year into the first quarter of the following year. That's the seasonal pattern. Of course, seasonal patterns often get overridden by events and developments in the economy and the political environment and in the markets themselves. So the big question is, seeing that gold and silver prices, platinum, palladium, copper, corporate bonds, stock market, they've all risen sharply over the last 2 months. And they've come off some, at least the precious metals and copper. The question is it sell in May and go away, as it often is? Or does that not apply this year because of the underlying economic and political situation? And that's what I really want to talk about. These are gold prices, and you can see the price of gold came into the year trading between $2,000 and $2,100. Those were record prices at the time. The price spiked higher in March and then again in April as investors became more concerned about the state of the economy. And since really the middle of April, prices have moved sideways, trading basically between $2,300 and $2,450, a new intraday record price. You can see on the right side how these price developments this year compare to price developments since 2014. From 2014 to 2019, prices were kind of moving sideways between $1,200 and $1,300, $1,350 for most of the time. They broke above that toward the end of 2019, moved into a higher level, setting new records, 2021, 2022, 2023. And now they've moved into a still higher level. Those are gold prices. Our expectation is that the gold price will probably move sideways. Last week we did a video on the rational expectations of gold and silver prices going forward, and we were talking about the difficulty that financial markets are having in trying to figure out what current economic trends and political developments mean for precious metals, copper, stocks, bonds, the overall economy. We are continuing to see economic expansion in the economy. We are continuing to see some deceleration of inflation rates. There is a habit on the part of some people to make inaccurate comments in the comment section of our YouTube videos. And Mike Markowski a few weeks ago said, I disagree with you on economic activity and on inflation. And then after Friday's video, he said, I'm still disagreeing with you. And I should point out to Mike, you're not disagreeing with me. You're disagreeing with the data. data that is compiled and produced and developed by thousands, if not tens of thousands of professional, unbiased experts who are paid to produce accurate data on economic activity and price inflation trends. You're not disagreeing with me. You're disagreeing with reality. Get with it. And if you say, well, those people who compile those data, they're biased, you're wrong. We've talked about that ad nauseum. You can go online and read in the good parts of the internet about how these data is actually compiled. In terms of inflation, CPI is calculated by compiling surveys that are done every month of actual consumers who fill out and send in information about how much, what they bought in the past month and what they paid for it. And then people who have no bias, who have great dedication to doing their job well, maybe you don't, so you don't understand that. They work together to pull together good indices that are indicative of inflation trends. That's what you're going up against. I was talking to a fellow a few weeks ago, and he seemed very intelligent and he seemed very rational, but then he started going off on these conspiracy theories about the 2020 election. And I asked him, I said, I assume you smoke. He said, why? I said, well, you're looking at what was the most secure, most carefully measured, most repeated and studied and reviewed and examined election in U.S. history, the most secure election in U.S. history. All the indications are that. There were 65 lawsuits alleging inaccuracies and theft of it. All of those lawsuits were lost. Georgia's vote was recounted, 3, 4, 6, 7 times. And they found like 5 Republicans who voted twice because they were using their mother's ballot too. I mean, you're the kind of guy who smokes because I don't care what every doctor in the world says. I don't care what all those medical studies say. I know that smoking's really not bad for me. That's the kind of rationality that gives oneself to saying, I don't care what all of these experts who are charged with doing an accurate, neutral, unbiased job do, and say, I know because I read on the internet from one guy who maybe didn't even study economics, maybe didn't even graduate from college because he was selling stereos, or who pretends he's a CIA agent, but he's not, or who says, oh, there's no silver left in the world, but I have 500,000 ounces that I can sell you if you want it, which, by the way, he hedges on the COMEX futures contract, and it shows up as a commercial short position, which he rails against commercials going short on the COMEX. So you can live a life of irrationality, or you can step into the light and do the homework. Sorry, got off track. Let's get back on it. Our expectation is that gold prices will continue to trade perhaps between $2,280 and $2,450 for the next few months during the seasonal period of seasonal weakness, and then probably rise in the last 4 months of this year into 2025. This is what we've been saying all along. Our short-term trade recommendations have said stand aside. This is a volatile market. That our most recent trade recommendation from last week is that you have $2,280 to $2,450 over the next few weeks and over the next couple months. That's what we're looking at as financial markets try to assess what really is going on in the economy and where it's headed, and what it means for the stock market, what it means for interest rates, what it means for precious metals. Beyond that, could go higher. Now, that's important because you have to stop and say, okay, let's say that the price of gold is $2,355. And rational people with good track records think that the price could trade between $2,880 and $2,450. That means that rational people with good track records, not the guys waving their arms saying that it's going to $10,000 because the dollar's collapsing. Rational people with good track records say price could fall another $75 from here. Yeah, what's $75 at $2,335? I think it's about 3 or 4%. But those same people say, hey, the price could go from $350 to $450. That's $100. It's a bigger move. So the risk-reward ratio of staying long here is greater in the short term than the risk-reward ratio of saying, oh my God, the price could fall 3%, 4%. I better get out of this position. And that's just the short-term view. Most of our clients are long-term investors. Some of them are very long-term investors. Most of them are very long-term investors. So these short-term gyrations don't matter. They might hedge their long position with a short-term, short futures or options situation. Say, well, if I can pick up 3 or 4%, I will. Lowers my average acquisition price if I think that way. By the way, there's a very interesting study that Reuters reported. 18% of central bank reserve managers say that they expect to increase their dollar holdings and the dollar's percentage of their foreign exchange reserves over the next 12 to 24 months. I have been wanting to cover that because there is some very funny, sadly funny, comments about a report that we did a few weeks ago on central bank gold. And I wanted to point out how misplaced the thinking was, but I haven't. But yes, independent think tank in London did a survey of central banks, and almost a fifth of the central banks think that they're going to increase their exposure to the dollar because they're more bullish on the dollar than they are on other currencies. And the majority of banks have been and can expect to continue lowering their exposure to the Chinese yuan because they see economic weakness possibly leading to a lower yuan. So that's just one thing. And then there's other indications that we've seen about interest rates and treasury, demand for treasuries from institutional investors around the world, which we've talked about recently. So that's sort of where we're looking at. We're looking at a market that's moving sideways, that's probably winding up for another move up, similar to the one we saw in March and April. But that move up may be a couple months away. Silver, very similar situation, moved sideways in January, February, slightly downward actually, trading between 22 and 23.50. Rose in March, rose in April, rose in May, and now it's consolidating. It actually fell below $30 today, disappointing any number of people who thought they'd see $75 by now. Yeah, that's where we are with silver. And then I just want to pay you attention to this. This is a chart of gold price seasonality. The typical movements higher in the early part of the year and lower in the middle part of the year in gold prices. And you can see, June, July, August, kind of weak. Springs back in September and October. Now, the question is, are investors sufficiently worried about political and economic conditions to stay long gold? What do they expect? Well, they're looking at interest rates that are staying high in the United States, but they're not so high. They're looking at economic activity that is healthy but showing signs of weakness. They're looking at economic stress. And what they're really worried about are the political developments in the United States. India has had its vote today, actually over the last several days, and they're tallying it up. It looks like Modi will probably win again. Other elections are coming down the road. You have a lot of political dissent in a number of countries around the world. You have international cooperation breaking down, and you have a war where Russia's invaded Ukraine, another one where Israel has attacked Gaza, and you have other international political concerns that are going on. And I think that investors are looking at all of that, and they're saying, I can live with slightly lower gold prices for the next few months, but I do think that the economic and political environment is such that I want to continue to hold gold and silver and maybe even add to my portfolio. And I think by September, those concerns will be even more well-defined, greater, stronger, and we will see rejuvenated demand for gold and silver leading to higher prices. That's what we've got today. Tried to keep it a little sharp, went off on a little bit of a diatribe against irrational thinking. Unfortunately, I know that irrational thinking is a universal factor across subjects, from politics to society to smoking to diet to precious metals. Take care of yourself. I'll talk to you later in the week. We'll see where we are by Friday. In the meantime, be good. Be good to yourself. Be good to people around you. Try to do something to help the world be a little bit better, or maybe a lot better. It's in your control. Take care.